Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, it's been an exciting week in MJ looking at weed, APH, ACB, EMC, OWCP, RTI, AMMJ, MJN, SPWRF, MGW, and CMED, a full plate here. So it was a great dip buying opportunity on Friday, and we had the news come out and as I read this news, my initial reaction is so what? Because we have a couple sentences from the press secretary, not even the president himself, and the media is just exploding this with sensationalized headlines, getting tons of clicks, tons of attention, and it's all overblown in my opinion. So when I saw the Canadian sector dumping because of this, I knew it was absolutely a dip buying opportunity because of the really lack of substance behind it. We do need to keep in mind that the two sectors, or the one sector in both countries, are going to be interrelated. Same as if U.S. oil companies got a big hit due to some law change or something, then Canadian oil companies would see some ill effect as well. So there is going to always be correlation among the sector across borders, but clearly this was not a big deal. And we saw, weed losing hundreds of millions of dollars in market cap on a dump that was really a great dip buying opportunity. So we'll look at the shorter term time frame here in just a moment. But as of right now, we have a nice long lower wick with bulls buying the dip. We did hold 1150 support, even though we dipped well below it. We closed above it, so that support is still there. The middle Bollinger Band daily support held. We have a gap now back to the upside at 1227, and the bulls seeing a nice job buying that dip with that long lower wick. So what was the signal to make a bullish entry? And I was live on webcam when this was going on, and there was an all-out dump right out of the gate. The 5-minute RSI hit 2. That is an absolute buy right now. Doesn't matter about anything else. This is how technical analysis helps us, because that is extremely oversold, and we don't know what's going to happen. We know that when the RSI is under 10, that a bounce in the near-term future is extremely likely. And, maybe if the CEO of weed was found selling nuclear secrets to Iran, we wouldn't buy if the RSI was this low. But the fact that the press secretary made a couple sentences causing the entire sector to dump, that is an absolute buy signal. And I believe it was 1125, 1130. I said I would be very comfortable buying here. We did end up hitting a new low of the day right after that, but clearly after that, the bulls saw nice control, and we saw really nice gains to the upside. So a very clear dip buying opportunity, and the RSI was the indication that it was safe to get in, knowing that we would very likely see a bounce in the near-term future. And that is exactly what happened. We saw bounces across the sector. Another one was GRNH. We had GRNH as a bounce play, and let's look at that real quick. I'm not going to look at the daily chart there, but GRNH was extremely oversold as well. Really nice dip buying opportunity. We went from 6.6, and then 2 hours later, we're up at 8.2. So huge gains to the upside, over 20% in 2 hours on that dip buying opportunity, and we were watching that one as well. So weed, bulls bought the dip. The question is going to be on Monday. Monday is a very important day for the sector because it's going to tell us whether or not this bulls buying the dip was for real in terms of strength. If we see follow through to the upside and a move for weed and all these other names back towards their highs of Friday, that's going to show that the bulls bought this dip very successfully and that there's not much to worry about in the short term. If, however, we see further weakness and we head back down towards the Friday lows, we know that the bears do have some momentum and we're still seeing some profit taking, and we need to watch the lows of Friday as key support. So the range on Friday, the low and the high, are going to be very telling. Whichever breaks on that range first is going to dictate the short-term direction. So for weed, we did confirm that bearish reversal doji from 2 weeks ago. And as long as we maintain higher lows, the bulls maintain control. Middle Bollinger Band on weekly is $9.74 and catching up towards $10 next week. And decreasing volume. That's exactly what the bulls want to see. A nice high volume on the breakout, and now that we are consolidating, it was still a low volume week. APH, actually, we need to point out, on all these weekly charts, we do have Monday was not trading, so 20% less trading time. So we do need to factor that in. And if we were going to do some estimations, we would take the total volume and multiply, add 20% to that. So for 16 million, we'd add another 3.2 million, 19.2. That's just a rough estimation, but we do have to factor in that there was less trading time. So APH, look at that dip buying opportunity, an all-out dump. We hit $6 and we closed at $6.34. So a nice 5+% move intraday, a great day trading day on Friday. And a lot of people did hold over the weekend. That's fine to see follow through. A lot of people locked in their gains. That's great too. So it is a solid bullish reversal hammer after a couple days of pullback, and the bulls need a green day and a break of 639 to show that strength on Monday. Weekly time frame is rejecting from the upper Bollinger Band on APH, and after a 2-week breakout, same thing on that volume. High volume on the way up, decreasing volume on consolidation. Still all fine for the bulls in APH. ACB, bulls bought the dip. We had a gap down open. Now, how do we know where to be looking for support on ACB? Look at the last time we had a big dump. We hit 246 and the bulls bought that dip. On Friday, we hit 247, 1 penny higher, and the bulls bought the dip in a significant way, closing at 262. So really nice dip buying opportunity there. Daily middle Bollinger Band support is holding. And just another point, if you're not using technical analysis and you think it's all phooey, how are you going to be visualizing these price action levels? You can see that the bulls bought the dip last time we hit 246, and they just did the exact same thing on Friday. So I really don't understand the logic on how you wouldn't want to at least be looking at the price action history and seeing what levels do what. So the weekly time frame for ACB, nice little higher low and higher high, indecision candlestick this last week, and the same thing, the bulls need follow through. There is a little gap at 268. We'll look for the bulls to continue to head to the upside. If we break 265, the gap will fill, and we're looking to just maintain higher lows and higher highs. This is now a very key support level going forward of 246. If 246 were to break anytime in the next few months, that is a red flag for the bulls, and we would be looking back down towards the low 230s. So that's a very important support to maintain. EMC, we've seen some pretty decent bearish volume on this pullback, so we do need to be cautious, and we're testing this 350 support level again. It's currently a double low. We have 350, 351, 350, and here we are yet again. The bulls must hold 350. If we break 350, the next level I'm looking at is 330. So we have a lot of people enacting the same plays that we've been doing before, where you put your buy entry just above 350 support and look to make that bounce. You get in and make a nice bounce. We've had 2 opportunities so far for really nice gains in the short term. And if you get in just above 350 and then 350 breaks, you exit at about 348 as soon as you can, because you know that support was key. And if we do break 350, we're going to see a lot of traders exit at the same time. We're going to see an increase in volume, and we're going to see a fairly quick drop, in my opinion. So 350 is a must-hold short-term level. And it looks like we are going to test that in the short term. And that volume, again, does indicate that the bears do have some momentum. But we did see some increasing volume the last test, and we made a bounce from 350 all the way to 420. So big-time gains for the bulls in just 3 days on that support bounce. Weekly chart for EMC shows the importance of that 350 level. If we break it, we then have a lower high and a lower low continuing consolidation. OWCP. Bulls did a really good job of holding up the price here. We had a big profit-taking day from 323, pulled back significantly. And here's another one. We're looking at the previous price, gave a really good gauge on where to look for support. So the low on Wednesday was 145. Look at the low on Thursday, 145. That's a double bottom. We had people getting in on that double bottom, and it's the same play. They made their entry right after they saw 145 hold, made their entry right around upper 140s, 150, and you put your stop loss just below 145. So if that support breaks, you are out, because we know that the bulls have not established a new support level yet. And the ideal scenario, which did end up playing out, is that you get that double bottom, and then you are in at that bottom with a very clear support level where you know to exit. It eliminates all the question, how do I know when to buy and sell? Your sell level is right there for you. And now here we are, closing at the high of the day on Friday, still above the upper Bollinger Band. We have not lost breakout mode on this consolidation. We held 151 at the low on Friday and closed up at the high. So we're looking for follow through. After 220, we'll look at 250 psychological, $3 psychological. There's not much price history up here, and the bulls are still in control. I would not be surprised to reach an equilibrium, which is where we have a breakout, our low of consolidation, anticipating a lower high compared to 323, and watching this range tighten as we settle down a little bit after that breakout. But 145 is now a key support going forward. Weekly time frame, bulls still in full control. Upper wick showing profit taking, not entirely significant. And again, the weekly chart, when we lose the upper Bollinger Band on the weekly chart, it has led to weeks of consolidation. So keep an eye on that weekly upper Bollinger Band. It's going to be in the 150s, 160s next week. RTI, we got a bull signal here as well again. The break of 79 cents was the signal for the bulls this week. That was the highest price we had seen. We consolidated. Perfect back test. Previous resistance, we had 62 cents, 62 cents, 61, 61. So a clear resistance level. Breaking 62 was the bull signal. Look at the perfect back test. We consolidated on decreasing volume. We back tested and held 62 cents to the penny. Previous resistance, now support, and then saw continuation. So we had people entering on the break of 79 cents, a new high here. And we didn't get much follow through the day that it broke, but the next day we ran up to 92 cents. So a nice 14+% gain on an entry after 79 cents broke. And the bulls are still in control here. We just established a higher low on Friday at 78 cents. Bulls want to hold that level going forward into next week. And we closed at the high of the day. So resistance is 88.92. And then looking up at $1 psychological. RTI weekly chart looking really healthy. Nice continuation. Breakout mode above the upper Bollinger Band. A really strong chart. AMMJ, big time dump. And another one where looking at the previous price action tells you the levels to be watching. So we had a very strong breakout. This candlestick right here shows indecision. It's a bearish reversal spinning top candlestick. Indecision at the top of an uptrend, top of a breakout, indicates that the bulls are tiring. So we had resistance at 104. On Thursday, we double topped at 104. The bulls could not break that level, and that's the signal for traders. Okay, we're not going any higher for now. Lock in that profit because we're going to consolidate. It's exactly what happened. We saw some decent consolidation, pulled back even more significantly on Friday. We dropped all the way down to 72 cents, and now we saw the bulls buy the dip. We closed above the middle Bollinger Band. So the dump on Thursday held the daily middle Bollinger Band. The dump on Friday held the middle daily Bollinger Band, closing just above that level of 793. This is a bullish reversal. Dragonfly Doji and a green day will confirm it, maintaining that the bulls are in control. Decreasing volume on this consolidation, even though it was an all-out dump. And lots of profit taking, but you could reload for 20% less. And that's the kind of play where if you are not needing the money that you're trading in these names at this point in time, you can be selling the rips and reloading on consolidation for the same amount of money. You're getting more shares, and that's how you just build your position over time. And that was a nice opportunity, buying the dip on Friday in a lot of these names. AMMJ on the weekly time frame, however, is a little bit concerning. And that's because we have been rejecting from this middle Bollinger Band. It acted as support, then it was resistance, and we have rejected multiple weeks in a row. That's at 85 cents. We have our high on the absolute, strong breakout, consolidation low. There's our lower high, higher low, lower high. So this is a perfect equilibrium pattern where we're getting tighter and tighter, and we're going to see bulls must hold 65 cents, and our new resistance is 104. So that's the range that I'm watching right now. We'll look for the bulls to form another higher low, and then they need to break 104, that little double top on the daily, to break the lower high pattern on the weekly time frame. MJN, so we had consolidation, volume climax signaling the top, highest volume day we had seen, and that was up at 343. Very impressive strength for the bulls, and we consolidated, decreasing volume on consolidation, gap down open on Friday, and gap downs are for buying, gap ups are for selling. General rule of thumb will not always work, but the majority of the time, that is the direction you want to be looking in. So a gap down open, bulls bought right away, and we saw a really strong move up to the upside. Resistance is 309 and 310, the high from Thursday and Friday, and then we're looking up at 343. Would not be surprised to see an equilibrium pattern play out here as well, where we see a lower high compared to 343 with a little bit of profit taking, but that was very solid volume for the bulls. So if we see more solid volume, if we see over 2 million shares traded on Monday, we could see the bulls continue and break 343. But every time I see a strong breakout and then consolidation, the odds are favoring an equilibrium pattern like we're seeing on that weekly time frame for AMMJ. And we would look for the same thing on the daily time frame for MJN, lower high, higher low, tightening range. Weekly time frame is a potential bearish reversal candlestick. This is that bearish reversal spinning top candlestick I just showed you, where it's indecision after a breakout. Potential volume climax here on the weekly time frame for now. You can see the volume climax back here. Look at these volume climaxes indicating consolidation. So volume climax, we consolidate for a month. Volume climax, we consolidate for over a month, 5-6 weeks. Potentially another volume climax. If we lose the upper Bollinger Band on the weekly on a red week, we will look for consolidation here again. But as we can see, the bulls do buy every consolidation period we've seen so far. This is a really strong uptrend since July. SPWRF. So we were watching the tightening range here. In the video I did last weekend, we were looking at CMED into this week and ACB. And those both had 2 green days with some nice profit opportunity for traders. And then most recently, I highlighted SPWRF and MGW because we had very tight ranges. We had seen other names in the sector break out from these tight ranges, but we didn't see the breaks here, and that's because of the bearish news and the weight to the downside on the sector. So in my opinion, you wait for the break on these tight ranges. We had a lot of people getting in this range and without the bull break, and I don't like that play just because your money is going to be sitting stagnant. If you're getting in on the break, the bulls have momentum and you're going to get action right away and volume. So we would have needed a break of 139 as a bullish signal, and the bearish break of 135 was a red flag, and then 132 was a big red flag. So there's our pullback. We broke bearish from this tight pattern, reaching an equilibrium. Higher lows, lower highs, tighter, tighter, tighter. And the red flag for me as well was all this volume with no price action to the upside. This is big time volume comparatively. Look at the run we had up here back at the start of January. It was on much lower volume and we saw huge price movement. And here we saw huge volume and very little price movement. So that leads me to believe something's going on behind the scenes in terms of shares trading hands. But the fact that the price was not going up was a bit of a red flag. Weekly time frame still strong. Middle Bollinger Band support is 123. Bulls must maintain 101 to keep the higher low pattern on the weekly intact. Pretty high volume, that's a concern as well. But as long as we hold the weekly Middle Bollinger Band, long-term bulls are A-OK with that trend. MGW, same thing. Look at this equilibrium. High, low, lower high, higher low, tight, 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 tight. Needed a break of 69 cents for the bullish signal, and that's because that was the highest price we had hit in the past couple of weeks. So if we get a break of 69 cents, that's a bull signal, and we see volume pour in. If you saw the video I did recently for OWCP, 72 cents was the bull signal, and that's because that was one of the lower highs that we had recently seen. As soon as 72 cents broke, volume poured in, and we saw an all-out breakout. We did not see that breakout here. We topped out at 69 and then dumped. As soon as we broke the low support of 65 cents, that's your red flag. Now, the bulls did buy the dip on Friday and closed at 65 cents, technically maintaining that support. A close below 65 cents is going to be a big red flag. The bulls really need some follow through and to head back up towards the upper 60-cent range. Weekly time frame is struggling at the middle Bollinger Band. That level is 68 cents, so we did close below it. We do still have higher lows on the weekly, but we can see ourselves tightening here. Another big long-term equilibrium, our high, low, lower high, and now a higher low at 60 cents. So the range on the weekly time frame is 60 cents support, 78 cents resistance, and you can see the Bollinger Bands are getting tight, reflecting that tightening range. And last we got CMED. CMED had a blue sky breakout. So why I liked CMED over last weekend was this bullish reversal candlestick right here. The normal healthy consolidation in a bull flag pattern, the middle Bollinger Band daily support, and the slight uptick in volume last Friday, showing the bulls getting ready to see a big move to the upside. And we saw 2 big time moves to the upside, a new all-time high on Thursday. So really nice short-term profit opportunity on that big bull volume break. And we had the same thing where we had a sell the news reaction in terms to the financials. And we're seeing that play out time and time again, where it's a sell the news reaction. And in my opinion, that's because this sector is so new. We don't really have benchmarks and other things to be going off of in terms of industry standards and the norms here. It's all really, we're looking ahead so far in terms of what the future is going to bring, that the current financials aren't really reflecting anything that are going to cause a jump up in share price at this point. So it has been a pattern of seeing a run up into the news and a sell the news, or run up into earnings and a sell the news kind of reaction when those earnings come out. And CMED was no different. But we did see the bulls buy the dip and maintain this middle Bollinger Band support, currently 1220. So we bounced off 1207. Bulls closed at the high of the day. A little bit of concern about volume. A lot of people don't like the lack of volume here, and that's definitely a valid point. But as long as you see over $100,000 per day trading, that's certainly enough liquidity to at least maintain swing positions. And in the past 5 days, we've been seeing millions of dollars of volume. So, it looks small, 68,000 shares traded, but in reality, that is over, well, let's see, 1,000 shares is 12,000, 120,000. So that is up close to $1 million traded, which is certainly enough liquidity for me personally. If you're going to be trading with a $100,000 position, that would be different, but bulls bought the dip, closed at the high of the day, maintaining higher lows and higher highs, and we'll look to see some continuation on Monday. And the weekly chart certainly favoring the bulls, a big upper wick of profit taking, but one thing that you will notice about CMED is it is very thinly traded, and a little bit of volume goes a long way. And the fact that we're at blue sky breakout levels this week, if we see that happen again with some bullish momentum, there's going to be some really nice gains to be had there. So that is what we've got heading into next week. Monday is going to be very important to see what kind of recovery momentum continuation we get on the reaction to news. We know the bulls bought the dip Friday. Question is going to be, are they going to see some continuation into Monday? So that is that. Oh, I want to touch on OWCP, and I've mentioned it a few times. Not going to keep bashing the stock, but just want to point out that this is the kind of stock where they don't have any. I've seen this story play out dozens and dozens and dozens and dozens of times in the U.S. sector. Doesn't mean it's going to happen again, but I just know that it is more likely than not to happen. So OWCP does not have any income coming in, or does not have enough revenue to be paying their executives, to be paying the bills, to be paying for expansion, any of that. So until they see profit, they're going to be diluting shares, decreasing shareholder value, and raising funds to continue, keeping the lights on. But I know they have all this promise in terms of their product and what it's going to do and all this and their trials and all that. But one thing that I do know is companies are really good at dangling carrots, and they're really good at keeping people dragging on, 1 month to the next in terms of keeping their hopes up and giving reasons for things and why there's delays and all that. Just know that in the amount of time that it's going to take to go from testing to receiving profit through distribution channels is going to be significant. If they pull this off in the next 2 months, I will gladly eat all my words and say I'm completely wrong, but I would be willing to bet money that they don't. I'd be willing to bet money that we're going to see further dilution and that we're not going to see the kind of revenue needed to prevent from dilution anytime in the near-term future. So that's not the kind of company that I want to be investing in. It's the kind of company I want to trade in. Obviously, there's huge gains to the upside. And the good news is, because of this breakout, pretty much everybody in at this point should be able to get out at break even at the absolute worst case scenario. So that's a good thing. Don't fall in love with this company in the sense that you can like their story and you can like their executive team and their drive and all that. But if the stock price, if you're in the green and then it's going to come back down and you could potentially be in the red, take that money, take a step back, assess the situation. You can have the best story in the world as a company, but if you have poor debt and share structure, that doesn't matter. It's still going to tear this company apart. So could I be wrong? Absolutely. Do I think I'm wrong? Absolutely not. But obviously I will admit if I am wrong. I just think that we are going to see in the next year plus a lot of significant further dilution, and I don't think we're going to see revenue as quickly as people think that we are going to see, and as maybe the company is leading us on. So we'll see. We'll see how it plays out. Again, I'm not going to keep harping on OWCP. I've given my point now a couple times. I think that's enough. And we'll check back in 6 months and see how it goes. So I appreciate you watching. Best of luck to everybody, and we'll see you sometime next week.